Here for a Power Lunch exclusive is Vlad Tenev, Robinhood's founder and CEO, joining us from Robinhood headquarters in Menlo Park, California, with our very own Kate Rooney. Kate?
Hi, Kelly. Thank you so much. And Vlad, thanks so much for having us. It's great to see you in person.
Thanks for coming down here. Always a pleasure.
So Robinhood is coming up on a 10-year anniversary. This company, a lot has changed in the time that you founded this company, especially in the last 2 years. The macro backdrop has changed. Retail traders have slowed down significantly. This company really was built on the foundation of individual traders. That's dried up in a lot of ways. How should investors think about the next 10 years for Robinhood, and what's your game plan when really the market has changed so drastically?
Well, we've always had the long-term vision, not just of being a trading app, but being the best place for customers to manage their finances holistically. And, you know, during COVID, we went through a period of exceptional growth, and we were known in the press and media for individual trading. But if you look at the products and the opportunity, I think Robinhood's just very much in the beginning. There's a gigantic financial services industry that's waiting to be disrupted beyond just investing and trading. You're seeing that with our entry into products like retirement, where we're offering a 1% match, 3% match on contributions if you're on a gold customer, along with 4.9% APY on uninvested cash. So these products both have allowed us to adapt to the new environment and give customers incredible value in a high rate environment, while also moving Robinhood along on our long-term journey of actually being the best place to hold all of your assets and all of your cash.
Is that going to drive shareholder value? The stock is below $10. It was trading not that long ago above 40. How are you thinking about recapturing some of that growth? And is financial services enough of an opportunity in terms of margins and just getting back to really the heyday of Robinhood we think about when you went public?
Yeah, I mean, obviously interest rates have had an effect on the overall valuation picture, not just for Robinhood, but for fintech and growth stocks in general. And what's exciting for me is that we're very much at the beginning of the journey here. I mean, Robinhood is still only in the US, and we have ambitious plans to be all over the world and expand internationally as a software company, not as a brick and mortar institution. We want to build these deep relationships with customers and have them trust us with their retirement savings. And our retirement product just crossed $1 billion in assets. Of course, that's pretty incredible growth in just a few months. But if you look at how big the retirement industry is in the US, there's tens of trillions of assets there. So as we look towards the future, we think we've barely gotten started. I think that Robinhood has much, much more growth left to do.
So Kelly's got a question for you, Vlad.
Kate, thank you. And Vlad, yes, it's Kelly here. And appreciate, kind of going from being the meme stock platform to helping people save for retirement is probably a service to society. So thank you. But my question is about credit cards. What are your plans in this realm? How big and important a business line could this be? And do you worry about getting into the business at the peak of the cycle?
We're very excited about credit cards. We think that that's an industry and a market that is waiting to be disrupted as well. If you look at the space right now, if you are a high net worth individual, someone with millions of dollars in your bank account, you actually have access to great credit, great rewards, great perks, excellent quality cards. But for the vast majority of people, those services are inaccessible. So we were proud to have acquired a company, X1, with a very, very motivated team, excellent product people. And I think the DNA is right for us to partner together and deliver a great Robinhood credit card for customers. So I'm excited to show that to you guys when it's live. But I think we've got something very special in the works.
And Vlad, it's Dom here. One of the things that you look at in terms of Robinhood's vision, I guess, that you have for it, is to become more all-encompassing with regard to financial services for all of the clients that you have out there. Is there going to be perhaps a focus on trying not to lose focus if you're going to branch out into all these different types of platforms and different types of offerings. I still think of Robinhood in some ways in terms of crypto. We've seen that fall off quite a bit. What exactly then does keep the focus at Robinhood in place?
I think it's really two things. So when you think about a Robinhood product, I think our unique differentiators in the market are our use of technology, which allows us to dramatically lower the cost that we offer to customers for our services, and the focus on customer experience. You know, Robinhood was the first financial product to win an Apple Design Award and really introduced the idea that user-centric user experience and design had a place in the financial services industry. And you've seen that in our stock trading products. You've seen kind of that thread in crypto. You're seeing it with retirement. You know, retirement, before Robinhood, it was inconceivable to get a built-in match in an IRA product. You only heard about those types of things for 401ks. And with credit cards expanding internationally and other products like advisory, I think Robinhood's perhaps the best positioned company in our space to take advantage of the tailwind of technology and user experience to deliver great products to customers.
And Vlad, we've seen this boom in options trading among retail investors. That's an area that you're moving into. What impact do you expect that to have, and when will you have the options and derivatives side going and up to speed? I just wonder what you're seeing in terms of the appetite for derivatives and options, which also kind of signifies risk taking on the retail trading side. I wonder how you think about how you're positioning there, and then what that says about the individual trader.
A big part of our offering is serving active traders. So, of course, we're serving individual investors and novice investors with our stock trading and retirement offerings. But if you look at kind of the value of low costs and zero fee per contract options trades, that's very unique in the market. And so you have all of these people that are extremely sophisticated and are employing these hedging strategies for whom paying 65 cents a contract at a brick and mortar brokerage house competitor is unpalatable. You know, if it's 65 cents a contract and you're trading even 100 contracts, that's a significant amount of money. That's $65 for that trade. So being able to save that, I think, has led to Robinhood in a relatively short amount of time being one of the largest options brokers and options trading platforms out there. So serving our active traders is definitely an important group, and it's really where we can test out we can push the frontiers of innovation in investing and trading. You can kind of see that more recently with 24-hour market. Robinhood became the first brokerage to offer 24-hour trading of individual named stocks in the U.S. So we've expanded that offering. Now we're up to close to 100 stocks. And we'd like for our active traders to actually make it clear that if you're not using Robinhood, you would actually be at a disadvantage because you wouldn't be able to manage your risk as effectively on another platform. Things happen after hours, and to be able to respond to them and effectively manage your risk is a huge differentiator that you just won't be able to find on other platforms.
Big boost living on the West Coast, having to trade East Coast hours. And last quick one, you have not seen dumb money, is that right?
I have not seen dumb money yet.
You have plans yet? You're going to see it at some point?
I'm very busy actually doing work here, so it's hard to find time to see movies. I'm sure I'll see it at some point. And hopefully some of it's true.
All right, Vlad Tenev, founder and CEO of Robinhood. We're continuing a conversation we just had on air, doing an extended version here for digital. Thanks again for having us.
Thanks for coming down.
Of course.
Always a pleasure.
So a lot of things I want to ask you about. One big topic is AI right now. How do you think about the impact and potential impact of AI on retail trading?
I think the impact is transformative. I think we've been lucky to see a lot of platform shifts over the past few decades. Robinhood benefited from one of them, which was the shift to mobile. And when we first got started, people were skeptical and underestimated the impact that mobile would have on our industry. People were asking, who would do serious financial transactions on a smartphone? And obviously now it's become kind of the fastest growing, very significant platform for financial services. I think AI is interesting in a couple of different dimensions. One is that it really has the potential to change the service layer. So Robinhood's done a great job in actually lowering the costs of transactions and making the user experience really good. But the service layer in terms of like providing customers with advice, giving clarity on what products customers could be using, and really driving that cross-sell, I think you'll see a lot of advances in that over the next few years. And AI will help bridge the gap between just sort of self-directed and giving the type of service that a high net worth individual could rely on a financial planner or an advisor for, and giving that to a much broader group of people.
So you're seeing it more on the financial advice side. So you could have sort of a Roboadvisor in some ways. Is that how we should kind of picture AI interacting with Robinhood?
I think it could be much bigger than just a robo-advisor. I mean, if you think about like what type of advice and really financial guidance someone who is a high net worth individual can get from their advisor, it ranges from budgeting, what products to use, what the best loans you can get are. It's really more of like a personal assistant for your finances. And I think that the companies that embrace that and really integrate AI, not just into the operations and customer service and sort of like the efficiency, but also think about how we can actually put it front and center and build products for customers will be at a big advantage. I think Robinhood is really well positioned to be a leader in that space with our focus on technology and the fact that we've been investing in AI and building machine learning teams since the founding of the company.
Do you have an edge in terms of the technology? I think about Fidelity having the scale to maybe spend more. Do you feel like you're in a better position than some of the incumbents?
I mean, I think that a lot of the incumbents are still running on mainframes. You know, they have tons of legacy infrastructure that they've sort of built upon over many, many decades. And I think that's one of the reasons why they can't move as quickly and they're not as nimble. You can kind of see through the product velocity that Robinhood has had and all of the products that we've launched in the past 12 months even, just how big the technology advantage and kind of being a modern engineering first company has been able to help us.
What about 24-hour trading? And so you guys are seen as this pioneer of cost cutting and the race to zero that we saw play out among other brokerage firms, and then fractional trading. I wonder if you expect the entire industry to go towards a 24-hour trading system.
I think you're already starting to see it. From what we're hearing, other brokerages are paying attention and seeing this as a threat that they'll have to respond to, because if their customers don't have the ability to react to a market event in real time, that's a big problem if you're an active trader. Eventually, you're going to take all of your activity to the platform that gives you the most advantages and puts you in the best position to manage your risk. And so I think over the next few years, there's going to be a need to offer these services by other brokers to stay competitive. And I think that's going to be good for not just Robinhood's customers, but customers everywhere.
Schwab and TD Ameritrade have been doing this ongoing integration. It's taken years, and we've seen headlines recently about some frustration with either registered investment advisors, individual customers. Is that an opportunity for Robinhood? Have you seen any attrition from Schwab coming over? Is that strategic? Would you ever kind of go after maybe an unhappy Schwab customer? And I wonder how some of the headwinds there may be either helping or hurting Robinhood.
Yeah, I think that anytime there's a shift like that and customers are sort of being forced to change platforms, they start looking around and asking themselves whether there's other platforms there. And we know that there have been people coming to Robinhood from TD Ameritrade who aren't happy with the merger. And one of the things that we've been focused on is how do we provide those active traders with the best possible service and the best experience. 24-hour market is a big element there. but also just the steady drumbeat of improvements that we've been making to the product and the service, better customer support, retirement accounts with a match, which really makes it possible for the first time to bring all of your assets into Robinhood. And just the momentum showing these customers that this is going to continue, and we're just going to continue offering more value and better services in the coming years. Whereas, their platform that they're currently with is doing an integration and a migration and really just like not pushing the service forward necessarily.
A lot of what you describe sounds to me like a bank. Is that something you'd ever consider, either acquiring a smaller bank or looking to get a bank charter yourself?
Well, you might remember back in 2019, we had filed for a national bank charter. And what we realized was we want to offer comprehensive financial services to our customers. And that includes a high interest on their cash, the ability to spend, both with debit and credit products, retirement services. And we've been able to actually launch really compelling products without having a charter at this point. We have one of the most competitive rates on cash that's out there with 4.9% and up to over $2 million in FDIC insurance, which is more than you can get from a single bank account. Single bank accounts are limited to $250,000. Mm-hmm. So in some ways, being able to partner and route and use multiple banks efficiently using technology has led to a much better product experience without us having to take on the additional complexities of the charter.
That's
but
interesting.
It's not a one-way door.
Yeah.
I think if there comes a need at some point, we have the balance sheet and the ability and kind of the regulatory muscle to do that.
You do have the balance sheet as well. How do you think about acquisitions, potential acquisitions, and your ability to maybe go out and buy more startups in a time when valuations have come down significantly?
Yeah, we've been watching the valuation environment, especially in fintech, very, very closely. And it's just continued to get attractive in lots of sectors. We want to make sure we're very, very prudent and we're not just, spending money left and right, because the culture of the company is to be lean and disciplined and make sure that, when we make a move, it's a well-reasoned move. I think the acquisition of X1 is very, very exciting. We're getting a great team. They have a great product already. We can kind of turbocharge it even more and make it even better when we add sort of the Robinhood design sensibilities and integrate it into the product. Say acquisition has been great, and it's really put us at the forefront of investor communications around earnings releases, and that's been very, very additive to Robinhood. So I think when we see opportunities like that, we're really happy to have the ability to capitalize on them.
On the other side, Robinhood has been talked about as a potential acquisition target. I talked about the stock price in our live interview. There are other big financial services companies that might look at Robinhood as a potential target. How do you think about growing independently? Is that something that you think about in terms of either trying to keep activist investors away? I wonder your roadmap for kind of staying an independent company at a time when you might be seen as an M&A target.
Yeah, I mean, honestly, it's not something we think much about. We're focused on growing our business and rolling out great products to customers. I mean, ever since Beju and I founded the company, we had sort of an aspiration of being a global financial services brand that survives the founders and serves customers all over the world. And every dollar you have should be well served at Robinhood, and you should trust us to keep all of your money with us, not just your trading. And we're very early in that journey. I think that there's, we look at the roadmap, it's full. There's multiple decades worth of work ahead of us.
So speaking of M&A, if we think about, we were talking a year ago about FTX or emergent Fidelity Technologies getting the 7% stake in Robinhood. At the time, you said you hadn't talked to Sam Bankman-Fried about it. Flash forward, there's this bankruptcy, the exchange collapses, and then you guys needed to buy back those shares. I wonder, now that you're sort of through that, reflecting on that experience, what's your thought on FTX now going bankrupt Sam Bankman-Fried is heading to a court next week, and he's on trial. I just would love to get your thoughts on that entire situation, having kind of gotten caught up in that yourself.
Yeah, I mean, I think that it's just a good reminder that we're in a highly regulated industry, and companies that succeed in financial services, that have millions of customers trusting them with a large number of assets, have to stand up to regulatory scrutiny and have to really invest in that. And I think one of the big dangerous points is letting companies that aren't under that type of scrutiny operate in the U.S. and advertise. I mean, you saw all the advertisements that they were running, and Super Bowl ads, and putting their names on stadiums, and backing chess competitions. It was really everywhere. And this was a company that was based in the Bahamas that really was like trying to be out of the limelight from a regulatory standpoint. Robinhood is a very, very different approach, and I think we've worked really hard to build that type of muscle and to operate in a highly regulated industry very, very properly. I think our Chief Legal Officer, Dan Gallagher, who's a former SEC commissioner, has really helped kind of take that up a notch for us over here.
So I wonder, just looking back on that, were you watching these Super Bowl ads and some of the spending by FTX and wondering how they were growing so quickly when you had so much scrutiny on Robinhood when it came from regulators?
I think that was an interesting time. Robinhood as well, I think, did very, very well in the cryptocurrency market. We've been growing market share. We've been offering great products and services to customers. And during COVID, there was incredible demand for Robinhood's products, not just, traditional financial products, but also our cryptocurrency business grew tremendously during that time period. So, I wasn't spending a lot of time watching Super Bowl ads. It was mostly just trying to make sure our own services were up and available and we were serving our customers well.
You had a lot going on yourself. Speaking of crypto, how is that business doing? We've seen a similar trend with cryptocurrency volumes as we have with the stock market. What are you seeing on that side of the business?
I think we're seeing that, certainly, the market has been cyclical as it's been since kind of the inception. This is sort of the first time that we're going through a crypto winter in a high interest rate environment. So it is a little bit different, but it's also during these environments that you're seeing new use cases pop up and a lot of new innovation. And I think if you kind of subtract the hype and all of the preponderance of different token listings, you're starting to see some real utility in things like stable coins that are facilitating round the clock frictionless payments. I think there's a lot of potential in that type of technology, and I think if you start to see more real world assets tokenized and using blockchain technology and infrastructure, I've seen the innards of how the traditional financial system works and how settlement is inefficient and how a lot of the companies out there are still relying on decades-old technology. So you kind of see the future there and how this could transform the entire infrastructure of the financial services industry. But there's definitely some zigs and zags and some navigation to both avoid the hype and the things that are distracting, while also focusing in on customer value and sort of navigating the regulatory environment properly as well.
T+2, that's something blockchain could potentially solve. Is that something you've thought about, that actually speeding up the settlement process? I think there's a lot of talk about that, kind of the height of the crypto boom. Is that really something that you think is viable in terms of revamping the back-end systems for the entire market?
I think it's certainly possible. From a technology standpoint, there's no reason why stocks have to take 2 days to settle. And the SEC has sort of endorsed the push to T+1 settlement, so we're shaving 1 day off. Yeah. It's still not real time, and I think real time is eventually where it's going to end. So it's not a technology barrier. It's mainly a barrier of bringing all of these legacy financial institutions on board so as not to disrupt their existing operations. So it's like you worry about backwards compatibility. You know, if you're a brick and mortar institution that's been using Fiserv for 30 years and you have to continue to process and serve your customers, how are you going to do that? So I think it will happen, and Robinhood will continue to push for that. But the barriers aren't technology right now.
One more crypto question. SEC, especially Gary Gensler, have been hyper-focused on token listings, cryptocurrencies being securities in their mind. How would that affect your business if all of a sudden the SEC said, objectively, everything out there other than Bitcoin is a security? I wonder how you're managing risk and planning going forward with some of the regulatory uncertainty.
I mean, we've been very prudent with what we list, and there's been a very rigorous process that we've developed here with the express purpose of making sure the assets we list aren't securities and that they're safe and sort of compliant and reasonable for our customers. And that's why we don't offer hundreds of assets to our customers. I think that I think we get some criticism for this sometimes because we do have a more limited asset collection. But part of that is we want to make sure that customers have access to high quality things that are well vetted. And so I think it's probably not realistic to make the argument that literally only Bitcoin is the non-security crypto. But I think it's also reasonable to say of the thousands of coins that are out there, there are a lot of securities. And perhaps customers do need more guardrails and more protection from the vast majority of these things, which might not be well vetted.
Speaking of regulators, payment for order flow has been a perennial topic in terms of the SEC wanting to ban it.
Right.
Has that changed at all in your mind, and how are you preparing the business for a scenario in which they could potentially ban that?
Yeah, I mean, payment for order flow, I think a lot of people don't realize this. It's been around for decades. It's a legal, regulated practice. It's sort of intrinsic to how the market works. We have market makers in the US that generate revenue from routing customer orders, and brokerages like Robinhood can capture some of that revenue. It doesn't make sense for it to only go to the market makers. So I think there's a lot of confusion with this. The proposals that the SEC has promulgated are confusing, and we've sort of commented through the comment process around it. And we do think that payment for order flow helps customers trade without commissions and has led to sort of a overall lower cost of investing for millions of people. That said, we're also diversifying our business. We're launching retirement. We have interest on cash, which is a very competitive product. And in the past quarter, Robinhood was net income positive. Also, the majority of our revenue was not transaction-based. And so as we get more and more products to customers and we continue to diversify our revenue streams, I think we'll see that our reliance on any one individual revenue stream is going to be less and less.
Interest rates in some way, or higher interest rates, have been a tailwind for Robinhood. You've reported higher net interest income, and it has also boosted your business and profitability. I wonder how you think about weighing the effect and the downside of higher rates on trading activity with the boost you might be getting on the cash side and the interest side for your own business.
Yeah, if you remember, the big criticism of Robinhood during COVID was, wow, interest rates are artificially low and so many people are investing and trading. What's going to happen with Robinhood's business when interest rates inevitably go up, because this can't continue? And that was sort of like the main criticism that we were seeing when we were a private company, late stage private. And we've been able to adapt our business. Not all companies have been able to sort of adapt their businesses to change to this environment. It's very painful to be a mortgage broker, for example, in this current environment. But it wasn't easy and it wasn't trivial. We had to actually launch new products like our high yield on cash, our retirement product. We've built things for active traders in a way that we really weren't focused on that group during the pandemic. And that's led to the financial profile and the diversified picture that you saw in the quarterly results. I think that's only going to continue as we march along on our vision of being the best comprehensive financial services platform globally.
What are you seeing in terms of trading behavior that's also likely incentivize some customers to move their money into higher yielding accounts? Could you give us sort of an overview of retail trading behavior? Are they moving more into things like bond ETFs? I just wonder what you're seeing on the platform.
Well, you have been seeing a really large influx of cash on the platform. Large portion of that is customers that see the 4.9% yield on cash with the $2+ million in FDIC insurance, and they're just taking the bulk of their cash that's outside and bringing it in to take advantage of that offer. I think in general, when interest rates are high, the threshold to make an investment increases. You think over a long period of time, after inflation, the stock market appreciates 7 to 10% per year. So if you're getting a 4.9% rate on your cash with much lower risk profile than investing in stocks, then that's going to change the money flows a little bit, and you're going to see less investing in stocks, more in cash. And I think that's kind of what we're seeing in the macro environment, not just in Robinhood, but money market fund inflows have been very, very high, and less inflows by individual investors into things like stocks. Now, on the other hand, active traders have the tools and use things like options to take advantage of any market environment. They know how to put on trades that can benefit from an environment that's just going up and down, environment that's more bearish. So we're seeing increases in that type of activity, and active traders continue to trade options, and that activity remains strong. And so we're building things for them as well.
Are you seeing any pockets of the existing meme stocks? There's been names like Yellow that have seen a bump in interest. Does that still exist out there? And I think there's some people still on the platform that are looking for risk and to kind of just ride the momentum in a way that we saw a couple of years ago.
I think that's sort of decreased substantially since since COVID. I think there's always kind of idiosyncratic events that bring in investors, but I think the bulk of the activity that we're seeing, especially with the 1% retirement match and recently 3% on gold, is people just depositing and building long-term portfolios on Robinhood, taking advantage of the better economics and the tools to do that.
Really interesting. I sat next to somebody on a plane yesterday who saw me doing some Robinhood research and said, "Oh, I bought Dogecoin on Robinhood," but he also had a Vanguard account. So he kind of used that as like his fun kind of side money, but also had what he thought of as kind of safer investment somewhere else. Are you looking to kind of the Vanguards and the Fidelities and trying to take market share versus finding entirely new investors that maybe aren't in the market? I just wonder about the opportunity to take some existing investors, maybe an older demographic, and transferring them to Robinhood. How is that strategy playing out?
One of the really interesting things that we've seen over the past couple of months is Robinhood being mentioned and being discussed in sort of these traditional passive investing forums like Bogleheads on Reddit, which, named after Jack Bogle, the founder of Vanguard. And you see these people that are saying, hey, the Boglehead philosophy is to basically use the tool that lets you build a lazy portfolio at the lowest possible cost over time. So you should be able to just create a portfolio, not do very much work, and over time saving on expense ratio fees, saving on commissions, is going to lead to potentially tens of thousands of dollars in excess returns. And these people are saying Robinhood is actually, like, bar none, the lowest cost place to do that type of investing. You're seeing that mentioned in all of these forums. And I think it's been really awesome because I think over time, you'll see that shift the brand perception. You need the products and the actual services to come first, but I think the reason why a lot of those Vanguard customers weren't using Robinhood in the past was because we didn't have the retirement accounts, we didn't have the matches and the service to make it a no-brainer. And as we keep building those products and services, you should hopefully see that the assets under custody in our retirement accounts continue to grow and eat into that large, 10 trillion plus IRA market.
So traders are going from Wall Street bets to now bogleheads. I feel like that's kind of a reflective of Robinhood kind of graduating to a different side of Reddit, maybe.
I think so. And, it's not necessarily the same people,
Yeah.
although there are lots of people that like to bucket these things separately. And you'll have kind of your long-term retirement savings in a separate account. And, you can have like more discretionary sort of self-directed shorter-term investments in another account. And now, recently Robinhood lets you have both of those on one platform. And we're tying everything together with gold so that if you're a Robinhood Gold customer, you sort of get the best rate and the best economics across all of our products. And that really, I think, creates a strong incentive to put the bulk of your finances into Robinhood, and not just kind of your discretionary self-directed, but also your retirement and your spending over time.
It's fascinating. A lot has changed, like I said, in the 10 years that you founded this company. I want to ask you a question about being a founder. You've had this decade that has had some high highs and low lows. I would think GameStop must have been a really trying time, as an entrepreneur.
It was a very confusing time. I mean, you probably remember we were talking during that time period. Confusing and trying for the whole industry, I would say, and Robinhood especially.
What advice would you have for founders or entrepreneurs that are maybe in the thick of it? They're building their own companies. Having been through a lot of adversity as a founder, what's your advice?
I think the advice is to always approach it as if you're just getting started, because the thing that I tell my team here is the moment we feel like we've won and that we're done democratizing finance for all and mission accomplished is the moment we start dying as a company. So it's just a constant reminder that the entire world of finance is ahead of us and is just waiting to be disrupted. And we're probably not even at 0.1% towards the overall mission or opportunity.
What keeps you motivated personally? You've got to motivate this team and keep them going and building a public company. Is there a motto or a mantra that you have that keeps you going?
There's just so much left to do. When I think about us right now, we're just in the U.S. I mean, we're doing retirement, but that product is very, very young. There's tens of trillions of assets that are waiting to be served, and I'm also an immigrant to this country who came with my parents, started basically from scratch, and lived in a small apartment in graduate housing on the East Coast. And I think about my grandparents in the mid-90s when Bulgaria was going through hyperinflation. They didn't have access to a stable currency. And just kind of thinking about how lucky we are in this country to have access to a stable currency and a powerful financial system that's well regulated. And there's billions of people around the world that don't have access to that, and in many cases don't even have access to a functional banking system to store their money. And we're nowhere close to even serving those people with all of their needs. So I think that opportunity and the ability to make an impact to something that's so personal to people. I mean, you can't get more personal than your finances and your money. I just consider that a huge privilege, and it just gives me energy and excitement to work on that every single day.
A lot to be grateful for living in the U.S. And yeah, it's been a really fascinating 10 years for you guys in covering this company. So a lot to look forward to in terms of you guys launching products and being public now. So quite a ride. Vlad, thank you so much for having us. Great to see you.
Yeah, thanks for coming down here. And we're just getting started, so plenty more to do.